Hello, welcome to Fininvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. So in the course of this presentation, I want to highlight the fundamental analysis of this particular company, C I Leasing Nigerian PLC. C I Leasing Nigerian PLC. This company is into equipment leasing. They lease equipment to their customers, and that's the company's primary operation. So please, before I continue this particular presentation, I want to talk to new as well as some experienced investor. If you really want to optimize your portfolio isn't delivering as expected, your portfolio is yielding low returns and need to be optimized, please you can call this particular number so I can come in and see how I can rebalance, re-strategize, and optimize your portfolio for better return on investments. Because on your own, I'm afraid you may not be able to put in the effort and the time to be able to make sure that your portfolio delivers what it ought to deliver. Please contact me so I can come and offer a helping hand, in that regards. So we want to talk about the result of this company. That's the full year result of C&I Leasing. You discover that the company generated a revenue of 36.738 billion naira in the full year 2024, as against 54.915 billion naira in the full year 2025, representing a percentage increase of 49.48%. 49.48%. We move down to the company's profit before tax. The company made a profit before tax of 2.683 billion naira, 2.683 billion naira, as against 3.765 billion naira. This gives us a percentage increase of 40.33%. 40.33%. We also want to examine the company's profit after tax. The company delivered a profit after tax of 1.138 billion naira, as against 2.525 billion naira in the full year 2025. This gives us a whopping 123.88%. That's more than doubled the figure for the profit after tax. So we move down to the most important figure in the whole table we are considering, in the whole analysis. This is the most important figure, and that is the company's earnings per share. So the earnings per share unfortunately dropped from 1 naira 15 kobo to 86 kobo. So considering the fact that there was an increase here of 49%, an increase here of 40%, another increase here of 124% approximately. How come? What really happened that there is the company recorded a decrease in earning per shares despite the increment in despite the increase in earnings in the parameters stated above? Now, this is where the issue lies. It lies on the other segment I'm going to consider in the course of this presentation. And of course, the company equally recorded a share price of 3 naira 91 kobo in the year 2024, as against 7 naira 30 kobo in the year 2025. This is the current share price, 7 naira 30 kobo, and this was the share price in 2024, 3 naira 91 kobo. And so we are through with this segment of the analysis. That is the profit and loss segment. We now want to refer to the balance sheet as well as the cash flow statements. So this is what I really want to emphasize in this section here, and that is the shares outstanding. The share outstanding here is 2.95 billion, 2.95 billion. You discover that what happened here is somewhat interesting. Despite the increase in all the parameters here, there was a decrease in the earnings per share. The fact is that as of 2024, all right, the earnings per share was 0.990 billion naira, about a billion naira. So if you divide, you know, the the company's pre-tax after tax profit, by this particular value, you will get this. You understand? Now, unfortunately, the company almost tripled its earnings per share from approximately 1 billion to approximately 3 billion naira. Okay, and so by the time you divide this particular figure, the profit after tax here, by the earnings per share here, you are going to arrive, at this particular value. This particular value. Now, assuming this pre-tax after tax profit was divided by this, all right, you will have gotten this particular one. In other words, the earning per share would have grown from 1 naira 15 kobo to 2 naira 55 kobo. It's just a function of what? A function of the change in the shares outstanding. The lower the share outstanding, the bigger the earning per shares, and the bigger the share outstanding, all right, the smaller the earning per shares. That is just what made the difference here. The company is doing well, actually, as you could see, but this was what really, amounted to this level of a drop in earnings per share. So this particular figure is very, very important. The shares outstanding. Once you alter it, it will certainly affect the level of the earnings per share you are going to get, all things being equal. We now go to the company's market capitalization. That is the share price multiplied by the shares outstanding. That will give you 21.54 billion naira is the market capitalization. So the equity here, or the shareholder funds, simply refers to the difference between the company's now total assets minus its total liabilities. You will get that will give you 45.46 billion naira. This company has a strong balance sheet, a strong, a robust shareholder fund or equity. It's telling us about how strong the company's balance sheet is. We now come to the equity per share. You simply divide this particular figure by the number of shares outstanding. That will give you the equity per share. The equity per share here means the company's book value. So on its own, really, it doesn't really tell much. But when you compare this to the company's current share price, you subtract the equity per share from the current share price. If you have a larger figure, it's telling you that the company is somewhat expensive. If you have a smaller figure, it's telling you that the company is somewhat less expensive. So in this case now, you discover that you subtract this from this, you have about 7, all right, and then the company is not all that expensive. Now, in a case where you come across a company where the share price here, the current share price, is less than the equity per share, please rush and buy that company. It is called net opportunity, net strategy. A strategy where you hunt for companies where there is where the current share price is less than the equity per share. It's rare, but you could come across it, somehow, somewhere. And then the cash position is also robust. The company has a cash position of 741.31 billion naira is the company's cash at hand, cash in the bank, and of course, cash equivalents. So you will now come to the company's PE ratio. That's the price of the company, 7 naira 30 kobo, divided by the earnings per share, which is 86 kobo. That will give you 8.49. So this company is actually cheap because it has a single digit PE ratio. And not only that, this particular number is telling us that you are buying a dollar, a dollar of earnings of this a naira of earnings of this company for as low as 8 naira. Okay, that's every 1 naira generated from this company, you are buying it for what? For 8 naira, which of course is not all that expensive. And so, of course, I've taken time to really highlight the importance of the earnings per share and its impact. So the importance of the share outstanding and its impact on the earning per shares of the company, which you've come to understand that when the earnings per share was low, okay, the and when the earnings per share was small, approximately 1 billion, the company recorded 1 naira 15 kobo in earnings per share. And when the earning per share was almost like tripled to approximately 3 billion, the earning per share dropped to what? Dropped to 86 kobo, despite the increase in profit after tax, as you can see in this particular table. So this figure is very, very important. So companies strive most of the times to do what? To reduce their earning per share. And once they do that, to reduce their shares outstanding. And once they do that, automatically it will impact their earning per shares positively, because of that inverse relationship between shares outstanding and of course the earnings per share. This company, actually, if I'm to recommend this particular company, I think I will recommend a buy. Okay, it's a very good company. You could buy and make it a small, maybe less than 5% or 5% of the portfolio, to be precise. It's very good. Actually, the company is doing well. If not for the fact that there was an increase in shares outstanding here, this company will have had, instead of 86 kobo, the company will have had 2 naira 55 kobo as the current earnings per share. This is what you will have gotten if not for the fact that there was an increase in shares outstanding from here to here. Please like this video and subscribe to my channel. And not only that, you could as well share the video to the people around you, so as to be able to reach out to as much as 1 million Nigerians with this particular message on investing. That's my target, that's my heart desire, to bring in education that will liberate our fellow our compatriots, both home and abroad, from a kind of, I wouldn't use the word ignorance. It can liberate us from what we are passing through financially, and give us the knowledge to be able to invest wisely and generate income for ourselves and take care of our extended family commitment. Thank you very much for watching. You can also watch other videos in my channel as well.